House meeting with government officials. He used the opportunity to share a document outlining the economic and national security benefits of building 5 gigawatt data centers in various U.S. states. To put that in context, 5 gigawatts is roughly equivalent to 5 nuclear reactors, or enough power for 3 million homes. Sonali?
The union representing 33,000 Boeing workers on strike have rejected the company's latest proposal to hike wages by 30%, and it's describing it as inadequate and disrespectful. We're going to bring in Bloomberg's Benedict Campbell, who runs our global aviation coverage. You look at this latest offer Boeing has put on the table here. It's not quite meeting the initial demands. Is this a matter of leverage that the union has over Boeing at this juncture, or is this a matter of getting what they think is right at this point in time?
Well, at this point, the two sides still seem quite far apart. The union saying we have no interest in negotiating this latest offer. As you said, 30% is what's on the table from Boeing on wages. They've also sweetened a couple of other things, but this remains at least sort of 10 points below what the unions would like to see. Now, most people would think, well, 30%, that's a pretty nice sweetener on my salary, but you've got to remember that these unions feel that they were shortchanged in the last round about a decade ago. Inflation has really hurt a lot of workers, so they are out here to get as much as they can. And given the dire straits that Boeing is in, they probably feel now is a good time to do this. With an opportunity again, so they are digging in.
It's a great point that 30%, obviously a huge number there, but you make the good point that you have to think about the base that they're starting from. I want to talk about what this means for Boeing. There was a really interesting analysis out from Jefferies estimating that basically the strike, it shut down production of the 737 MAX, other jetliners. It could drain an additional $1.3 billion in cash from Boeing each month. I mean, how painful is this for Boeing when you think about all the other issues it has right now?
Well, that's exactly the point. I mean, this is a company that went into this strike already reeling. I mean, we all remember what's been going on at Boeing since January 5th, since that accident on the Alaska Airlines plane. And since then, they've tried to sort of regain their footing, but it's been very difficult. They were sort of getting there slowly. The production of the cash cow 737 started inching up again, and then the strike happened. So they are in an incredibly difficult position here. And for them, in some ways, it's about sort of striking a balance between what will another sweetener cost us versus what does it cost us to prolong this strike. By some estimates, it's about $100 million a day that it's costing Boeing in terms of cash, and frankly, cash that the company does not have. In the first 6 months of the year, they lost $6 billion. The credit rating is dangerously close to junk. So all of these things together put them in a very difficult negotiation position.
How much of this is about the bad relationship between Boeing management and union management? Because, you know, the union was angry, the leaders were angry that Boeing went around those leaders and actually offered this to, you know, the base, to the actual workers. They said it was disrespectful. But does it really matter if they're giving the workers what the workers want?
Normally you would think, yes, there's a way to go about this, and you negotiate with the union, and then the union presents it to the workers. This time, Boeing took they threw in the sweetener. They said, let's circumnavigate the unions, go straight to the workers. The trouble is, the offer they came with, those 30%, was a bit of a low-ball approach. So if you're going to do that, you might have to come in with something more substantial, really a sort of knock it out of the ballpark type offer, closer to the 40%. Then they might have succeeded in driving a wedge between the workers and the unions. This way, it seems as though we harden the resolves of the union and the workers, and it might be a bit of a miscalculation on the side of Boeing. It will be interesting to see whether they can sort of patch that up again, get back to the negotiation table. The last round, last week, they spoke with a mediator. Both sides say, we want to get back at the table, but at this point, there doesn't really seem to be a very clear resolution.
Benny, thanks so much. Benedict Campbell there, coming to us from our Berlin bureau, talking about the Boeing strike, because Benny has such amazing experience with the airline industry and airliner production. Coming up, the spice is spiked. Coca-Cola ditches its newest flavor. We'll have details in Social Climbers next. This is Bloomberg.
the spotlight on these dynamic leaders. Etsy's a marketplace for innovative items made with thought, care, and style. So it's no surprise CFO Rachel Glazer sees her job as breaking boundaries.
We don't have to stick to our silo of what our role is. We're able to just know a lot about the business and contribute in lots of different ways.
Watch Chief Future Officer, October 9th on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
All right, it's time now for Social Climbers. The company's making waves this morning, and first up, Paramount Global is cutting more jobs as part of the $500 million cost-cutting effort announced in June. The media company is paring back its U.S. workforce, mainly targeting employees in the marketing, communications, and technology departments. Next up, we have Stitch Fix unraveling after the personal styling platform issued weaker than expected forecasts for the next year. Analysts are also disappointed by the company's projection that it will only return to revenue growth by the end of 2026. You can see shares currently down 29%, so traders clearly disappointed as well. And finally, Dr. Pepper fans can rest easy because Coca-Cola announcing today that it's discontinuing its spice flavor less than a year after it hit shelves. The beverage, of course, it blended the traditional Coke flavor with raspberry notes, and it was the first alternative to the classic Coke that was offered in 3 years. The company didn't provide a specific reason for axing spice. Of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, but let's take a look at markets right now. Even though if you're looking for action, you're not going to find it on the index level. You can see the S&P 500, we're going to call that unchanged, maybe a little bit lower. Of course, it's not the slight gain we were looking at yesterday when we saw that 41st record high of 2024. Of course, taking a little bit of a breather. Same thing, too, if you take a look at the NASDAQ 100, currently down about 0.1% pre-market. Small caps fighting for it, of course. We were a little bit higher on the Russell 2000. Now we're going to go ahead and call that unchanged, Matt.
Why? What does spice have to do with Dr. Pepper? Why do Dr. Pepper
Because
fans
Dr.
worry about?
Pepper is spicy.
But Coca-Cola Spiced had raspberry?
It was supposed to be a little bit spicy. I don't know. It's discontinued, so now
Okay.
we'll never know.
All right, yeah, we can't try it now. Less than 4 minutes until the opening bell. We'll focus back in on markets at BlackRock's Gargi Chowdhury next. This is Bloomberg.
This is what Bill calls home, and this is what Janice calls office. And by day, it's the home office. But sometimes, it's the guest room. California Closets designed this space with purpose by listening to Janice and to Bill, whose parents sleep here when they're in town visiting. From here. This is a stapler. Nobody wants to look at a stapler. This is where it goes. This is where Janice gets her energy. This is where Bill gets his. This is Janice's home office and Bill's and the guest room. This is who helped make it happen. Schedule your free design consultation now.
And where we were predominantly in India and the developing.
Indian-centric, now you're back home.
Yes.
So you're about 8,000 strong?
Yes.
Somebody?
All
Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but is producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5–2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched. We're going to scale that up as well.
It's countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. This market can be whatever you want it to be today. You can make something of this market. Right now, it's unchanged. It's just a blank canvas. So do something with it. S&P futures at 0. NASDAQ futures down 0.1%. Ringing the bell. This is pretty interesting. At the New York Stock Exchange, the president of the European Commission, Ursula von der Leyen, I'm not sure if it's official or if the New York Stock Exchange website just chose this. They refer to her as Your Excellency. Her Excellency, Ursula von der Leyen, ringing the bell at the New York Stock Exchange after the 41st record close of the year on the S&P 500. Katie, are we going to see a 42nd record close today?
You know, I don't know, but let's try to make something out of this market.
Katie Greifeld?
I'll try my best. An optimist might say we are very close to record highs. We got one yesterday. Maybe we'll get one today. A pessimist might say, I don't know, you look at this, you see a little bit of red for the NASDAQ 100, currently down 0.1%. The S&P 500, a little bit higher, 0.1%. Small caps, meanwhile, unchanged, really taking a breather after that record run that we've been witnessed to. Meanwhile, let's take a look under the hood where we do have some action. We'll start with home builder KB Homes. It disappointed with net orders for the third quarter despite lowering interest rates and an outlook that topped Wall Street estimates. That was not enough. Chanel, you take a look at shares right now, currently down by more than 5%.
Also, Katie, I know you're watching this one too. DJT, Trump's media company, rebounding from the lowest level in years. Trump has vowed not to sell his majority stake. We're going to talk more about that in a moment. And in the meantime, watching Trump Media and Technology Group, third day of gains, 3.9% higher, Matt.
All right, Morgan Stanley analyst Adam Jonas downgraded a number of big automakers, including General Motors. You can see those shares are off, as are shares of Ford. Take a closer look at the auto stocks with